Where is the bottom? That is a $1 million question that everybody is asking, everybody's talking about. So, you know, it's an important question, right? It's an important question because it does determine if you're going to invest or if you're going to trade, or, you know, what your time horizon is. So it's all over the news, right? This favorite Fibonacci retracement. Let me just make sure you guys can see this. Make it a little bit bigger. That might be an issue since. So we're going back to, let's see. Right, so if you retrace the last kind of bear market, right, the start of the pandemic from March of 2020 to the current, to the 52-week high in January, December of this year, we reached yesterday exactly 50% retracement, right, almost to the dot, 349, 350 level. And also corresponds to the elections after our president was elected, right, back in November of 2020. We are back to that level. So basically, all of the gains kind of were wiped out since the elections, right? All the gains wiped out since the elections, and we're at 50% retracement. Right, so very important key level. And the question is, just like Mark says, is this the bottom, right? Is this the bottom? My answer to this, well, depends how, you know, the bull's argument, let's go over the bull's argument, why it is the bottom, right? So the bull argument why it's the bottom, they're basically gonna say that we had really bad CPI data, really bad PPI data, right? The inflation is stubborn, it's here to stay. Fed has no choice but to continue raising interest rates. And the market sold off after the announcement, 2%, almost 3%. Spiders were down as much as 3%, new lows, 50% retracement, 348, and it rebounded back to 367 level. So 3% down, almost 3% up, 6% move. Last time in the history of, I think it's in the stock market, there's only 4 occurrences of such a large reversal. Last one was back in 2020, and then in 2008. So every time, there's only been 4 occurrences of such a large reversal on large volume, right? We had this large movements in volume, and historically, you know, 1 week later, 1 month later, the stock would continue to go higher, right? So that's the bull argument, right? That we are down, you know, 20% on spiders, 25% on QQQ from the last high, right? June, July high. Sorry, July, August highs, and the VIX reached the 36 level, right? That's where there's a lot of overhead resistance in terms of volatility and uncertainty. What does it mean, VIX 36 for the past 2 years? It means that everybody anticipates the market is going to break, and everybody's hedging, buying a lot of puts, right? So in this environment, it's very hard to push the market all the way down, right? So that would be the bull argument, and then they would look at the 2-year yield, right? 2-year yield. We briefly broke through the 52-week high, pull back. It's actually high right now, and then same thing with dollar. We're not at 52-week high. We actually retraced and pull back. So looking at the volatility, looking at the fact that the market rallied on really bad news, basically the argument is there's no more sellers, at least for now, right? All of the people who wanted to sell and who don't want to hold the position, they kind of capitulated, right? Mini capitulation, right? VIX hasn't reached really extreme levels, so at least mini capitulation. So that's basically the bull argument, right? The bull argument that this is maybe not the bottom for the entire, you know, for the next 12 months, but this is a short term is the bottom, maybe for the next couple months, right? Going into the midterm elections and going into the end of the year. So let's vote, right? We're here to kind of learn and vote and not to fall asleep. So one is, right? One is, you know, is this the bottom? I'm going to have two questions. One is this the bottom for 2022? So let's answer yes or no. So is this at least short-term the bottom? Like for the next few weeks, for the next few months, we kind of reached the bottom, and the market, the path of least resistance is to continue going higher. How many of you say yes? And how many of you say no? Oh, Mark said, when is the bottom? Not where is the bottom. When is the bottom? Okay. So, no. Okay, so this is just the bottom for this year. Mark said no. Trader, no. Joseph says yes. A bit more to go. No. Okay, so most of you said no, which is, that's the answer I would expect, right? Because the market sold off, we had mini capitulation, everybody's concerned. So you do have this kind of a crowd effect, right? Herd mentality that, there's no way this is the bottom of 2022. So majority of you said, 75% of you said, no, that's not the bottom for 2022. I'm going to say, yes, it is the bottom, right? I'm going to say yes. And when I say it's the bottom, I mean, can it reach, we had 350, can it reach 345, 340? Maybe. Very unlikely in my opinion, but maybe. But, there's very little room to the downside, right? I think to the downside, okay, we're at 361, 350. Okay, so you have 10 points to the downside. All right, 10 points to the downside. And I think we can reach 400 level by end of the year, right? Plus 40 points to the upside. So risk versus reward, in my opinion, is very favorable to, at least if you're a tactical short-term trader that thinks in weeks or thinks in months, you have 10 points to the downside, 40 points to the upside. It's 1 to 4, 1 to 2. This is very favorable conditions. If you're aggressive short-term to medium-term trader, to go along. So I'm going to put this contrarian view. So I'm going to say yes. I think this is the bottom or very, very close to the bottom. Maybe it was in 1%, 2%. The second question, let's start answering the second question. Is this the bottom? So is this? So is this the bottom for 2023? Okay. So the second question, right? In trading, especially if in a bear market, by definition, we are trading in a bear market. I don't think that you will find many people who don't think we're in trading bear market. By definition, bear market is a trader's market, right? In the past, since 2008, it was investors market, right? Passive investor outperform active investor almost consistently for the past 12 years. Now, it's the other way around. Active traders outperforming passive investors. What is the definition of active investor or active trader? Is that you have a sense of direction, magnitude, and time, right? You need to, when you're trading the market, you do have to think in these vectors, right? Like going back to, I don't know, calculus class or physics class, right? When you trade, you have to think in one direction is time. You have to think about time. You have to think about direction, right? And you have to think about it in magnitude, right? And the resultant of these three vectors will determine, where you're going and, how fast you're going to get there. So the question number 2, let's pose it. Is this the bottom, for this year and also next year?